So this is positional trade strategy for buying of certain stock. Here what we have to see Nifty 50 indices chart and the stock which we are taking, which we are planning to take, that particular stock in 30 minutes time frame. Yeah, we are seeing this in 30 minutes time frame. Here we have all the indicators which we discussed: super trend, 20 moving average, CPR, etc. Now what we have to do, we have to take a delivery based trade which can go for a day till few days. Yeah, it can goes for 5, 6, 7, 8 or certain days. We will enter the trade when we get a trigger for entry, and we will exit the trade when we will get the trigger to exit. This exit can come in 1 day, 2 days, or maybe it can take weeks. Yes, but let me make this very clear to you. More is the duration of a trade, more profitable it will be. Now we are looking at 30 minutes time frame on a certain stock. How we will enter? Entry will be when the price action candle on the upside, yeah, we are buying, when the price action candle breaks the red line of super trend in 30 minutes time frame, something like this. As soon as it breaks and turns into green, we enter our trade. How many quantities you have to take? This you can calculate with our position sizing method, which I will be discussing with you in some time. You will let on the trade to continue unless this green line is broken by price action candle. Once the green line is broken, let's say this candle comes down and the green has turned into red, this is where you will exit from the trade. On the next page, I will be sharing the details of the trades which I have taken, and I will share few more information. Entry, we will enter the trade when 30 minutes super trend upside, because it's buying, breakout happens on a given stock. Exit, we will exit when 30 minutes super trend breakout ends. Stop loss, trail your stop loss with super trend line. This is the line, this is, you have to trail your stop loss. What type of trade is this? This is a delivery based trade in cash market. Duration can be days to weeks. Indicators, I have already told you, their default time frame is 30 minutes. Quantity as per position sizing, we will be discussing on this. This is best for people who are working, who are in their 9 to 5 job, and it is equally good for people who are actually full-time traders. Because of positional entry, trade can go up to days or weeks. Longer the trade means more profitable it will be, mostly. Let me show you how you can take entry in positional trades. Let's say you are taking IRCTC stock and you have already identified it. You are looking at somewhere here, this whole thing is not there. You're just looking at this picture and you see that the price action candle has just given a breakout here, right? 30 minutes time frame, please remember this. The price action candle has given a breakout here. So this is our trigger for entry, right? Here you will enter with quantity, whatever is given by our position sizing parameter. Now, we entered here on 30th and the trade continued. You took this trade and it continued for good 20 days. On 20th it came, yeah, for good 20 days you took this trade. A lot of people might be thinking for 20 days you have to hold the trade. To become consistent trader, I have to clear this. It's a disclaimer basically for everyone. For consistent trader, or to become a consistent trader, you need to understand one thing. Share market is not a place where you will you will win $1 million lottery on a certain day and then you will close your terminal and go home and become a millionaire. It is every day's effort. Every day's effort. People who are making money in stock market, read their stories, ask them how they have made this. They have made this with drop by drop by drop. It is like any other business. Start treating this as any other business and profits will start coming in. The winning percentage in trading is so less that people come and they with the speed they come, and with that same speed they go out. And the reason for that is discipline is missing. People don't do rule-based trading. When they start doing rule-based trading, they create a discipline for them, and that's where with this discipline, maybe with the small drops initially, small amount initially, profits will start coming in. Keep nurturing it like a seed, and one day it will become tree and will give you a lot of fruits. Now, coming back to the strategy. You see the price action candles on 30 minutes time frame is breaking the super trend, which is our trigger, and with this we enter our trade and we keep on we stick to the trade as long as the the super trend line is not breaking. Here on 20th, actually on 19th, somewhere around 2 o'clock, the market gave a breakout, and this is where you will exit the trade. Now, very important thing which you have to keep in mind, even if the price action candles are giving breakout and the CPR like this is here somewhere, a lot of scenarios will come like this, and CPR is here, but all your triggers are coming and you are the price action candle is giving a breakout, you will not take this trade. Simply. Why? Support and resistance. There are three resistance here to stop the price action candle. It will give a false breakout. So whenever you see resistance above your price action candles, when you're about to enter any trade, do not take that trade. Beat any trade. Do not take that trade. There is a high possibility that the candle will go up and will come down. False breakout will happen. Yeah. Now, what is your stop loss? Your stop loss is when I have already told you the green, this green super trend doesn't turn into red.